Every April, here in the UK, the rules change. And for many people, they leave money on the table where they could be saving a huge amount of tax. So in this video today, I'm going to walk you through the 25-26 UK tax allowances that are available to you every single year. And you can still use them right now to legally reduce your tax bill. But many of us don't bother. And that means you can keep more of what you actually earn. Hi, I'm Gareth Shears. I'm a chartered financial planner here in the UK with over 18 years worth of experience in financial planning. And I help people just like you plan smarter and pay less tax well within the rules that are allowed. By the end of this video, you'll know how to use your allowances with income, ISAs, pensions, savings, and the inheritance tax allowances to keep more of your income and grow your wealth a lot faster. Okay, let's start with the basics. Income tax allowances. Now, everyone gets the personal allowance, which is currently £12,570 a year. But once your income goes over £100,000, and you may have heard about this from the 60% tax trap, you start to lose your personal allowance. So once you get to £125,000 income, you've completely lost it. And all of that starting income is a 20% tax. Now, there's another one which not many people have heard of, which is the marriage allowance. This is where you can transfer 10% of the other partner's personal allowance, so it's around about £1,260 a year, to the other person's tax code, so they get more at the basic level. Now, this could save around £250 a year in tax, and it all adds up. Now, let's move on to ISAs. What I would say is still probably the simplest tax wrapper for most people who are investing or saving for the future. Okay, so you get a £20,000 allowance here in the UK every single year, and that's across both stocks and shares and cash ISAs, and you can mix that up. Now, you also here in the UK get a lifetime ISA allowance, which is £4,000, and the government then will give you a 25% uplift on that, taking it to £5,000 maximum, so a maximum of £1,000 uplift. But bear in mind that £4,000 is included in your £20,000 allowance, which you get for ISAs. Now, the lifetime ISA does come with other caveats, which I will cover in a different video because there's lots of different variations of how this will work. Okay, so the next one is the junior ISA. Now, this is available to your children from the age of 0 up to 18. And you get a £9,000 allowance for this. Now, this doesn't affect your allowance. This is purely for them. We're very mindful of the junior ISA that they do get access to this when they're 18 and you have no control over that. Now, that can be invested also in cash and stocks and shares. And I would always seek advice when you're looking at doing this type of investment. Now, next up, let's talk pensions. Probably the biggest, the most underused tax wrapper by high earners in the UK. Now, the current annual allowance for pensions is £60,000 or 100% of earnings, or whichever is lower of those two. Now, be mindful if you are a high earner, once you start to break the £200,000 limit, that will taper down to potentially a minimum of £10,000. Now, I'll do another video on this one because there's a little bit of complexities around the tapering of annual allowance for pensions, but just be mindful of that. But you do in the UK have a £60,000 allowance. Now then, there is this other unique thing where you can actually use what's called carry forward, which is a strange way of explaining it because actually you're carrying back previous years. So this is where you can go back 3 years previously of your allowances and use them all as once within a pension, which means you could contribute in some instances up to £180,000 into a pension in 1 year. But that comes with some caveats on the basis you have to earn that amount of money in the first place and have that allowance available. You have to take into account what you've used in previous years. Now, the lifetime allowance, which was a big thing in the UK, is now gone, but it's been replaced by 2 other points. Now, the first one being the lump sum allowance. So that's where the maximum you can have from a tax-free amount from your pension, and then the rest would be taxable, which is currently £268,275. And that's available to everyone. Then there's the lump sum and death benefit allowance, which is £1,073,100. Now, bear in mind, there are some people out there who will have certain amounts of protections and things like that, which were available to people who had certain values of pensions. Now, this isn't available to everyone, but you may be one of those people. If you are one of those people, I would suggest you take some regulated advice for that on the basis that it is a very complex area. Okay, now let's move on to the savings and investments allowances. Now, a lot of people are not aware of these, and they've actually become more relevant over recent years on the basis that interest rates are being quite high, and a good 60+% of people are saving money in the bank. So this has been very relevant, and a lot of people are going to have these tax bills coming through the door. Okay, let's start off with the personal savings allowance. Okay, so this is available at different levels. So if you're a basic rate taxpayer, you get a £1,000 savings allowance. If you're a higher rate taxpayer, you get £500. Now, if you're an additional rate taxpayer, you actually lose that altogether and you get no allowance. You will just pay the full tax at 45% on your savings. At the basic rate, you'll pay 20% over the £1,000, and at the higher rate, after the £500 allowance, you will pay 40%. Okay, so some little unknown ones which a lot of people don't come across, maybe business owners will do more than anything, is dividend allowance. So that's now £500. It was a lot higher in previous years, but it's now come down to £500. And then is your capital gains tax allowance. That's a £3,000 allowance that you get. And that's for disposal of any assets which would have a capital gain on them. For example, disposing of rental properties or certain shares and things like that. You know, these ones are still worth considering if you have built money up outside pensions and ISA wrappers where they're tax efficient. That's where you'd want to use these allowances each year. Now then there's a few smaller allowances which generally go unnoticed and a lot of people don't know about. But let me add these to the list of tax allowances that you can use in the 25-26 tax year. So there's the trading allowance. That's £1,000 you can use towards self-employed side hustles that you've got. Property allowance, that's £1,000 for a side property business that you might have, maybe if you've kind of been an accidental landlord and you're renting out a property. Then the big one is rent a room relief. If you rent a room in your house, you get a £7,500 allowance towards tax, where you don't have to pay any tax on that of anybody you rent a room to and charge them for it. And then there's the inheritance tax gifting rules. Now these are available each year, and if you don't use them, you will lose them. Now there is one you can carry back to a previous year, and that's the first one, which is the £3,000 annual gift allowance. So that's for any gifts that you give to anybody in a year. And then there's the £250 per person small gifts available to you. And then there's the wedding gifts one. So you can gift up to £5,000 to an individual child, £2,500 to a grandchild, and £1,000 to anyone else. And that will come off your inheritance tax bill if you were to pass away. Okay, so that's a rundown of the main allowances here available in the UK for the 25-26 tax year, and it is a use it or lose it scenario. Now there is some in there which you can carry back, for example, like the pension one and the inheritance tax gift allowance. But for the others, if you don't use them, you're going to lose them. So let's quickly recap those allowances. So the first one is your ISA allowance, £20,000. There's your LISA allowance, which is £4,000, but that does get taken into account to your £20,000 allowance. Okay. Then there's your junior ISA allowance, which is £9,000. Then we move on to pension allowance. That's £60,000 a year. There's also one I missed out, which is the junior pension allowance, which is £3,600 a year, 2,880 net a year. You can put into a child's pension. There's a personal savings allowance, which is £1,000 at the basic rate, £500 at the higher rate, and then £0 at your additional rate tax. Dividend allowance of £500, capital gains tax of £3,000, rent room relief at £7,500, trading property allowance at £1,000, then plus the other ones which are available there, like inheritance tax and so on and so forth. I could list them all, but they're all in the video which you've just watched. So that's the 25-26 tax allowances in a nutshell. If you're not using them, make sure you are, because like I say, with many of them, once they're gone, they're gone. Now, I hope you enjoyed that. If it's someone you think would benefit from seeing this, please share it too, because that helps me grow this channel and helps me spread the word and help people get educated more about money. And until then, let's see you in the next video.